Hey guys, before the video starts, I just want to clarify that this is by no means a stock market portfolio tutorial. It's just meant to be me taking you through my first year of investing, what was going on inside my head, and what led me to have a successful year in the stock market. And I hope it inspires you to start right away if you haven't already, because as you'll see in the video, it's a snowball effect, and the sooner you start, the more you'll be rewarded. So thanks for watching. I hope you guys enjoy. If you want to truly win at the stock market, you've got to play the long-term game. And that's what I want to get to in this video. That was a lot louder than I thought it would be. All right. I have been holding back on making a stock market guide because I haven't really felt like I was qualified to teach anybody about the stock market. It was February 7th, 2020, when I put money into the stock market. It was only about $1,000. And I was just throwing in money because I saw the market was going down. And it was going down because of COVID, obviously. And when I put my money into the stock market, it just went down. So a couple days later, I put another $1,000 into the stock market, and it started going down even more. Towards the end of February, I was like, oh my gosh, the stock market just keeps on going down. So I did something very stupid that in hindsight, probably shouldn't do this, all right? I was just feeling really confident, but I grabbed my emergency fund, which was about $10,000, and I was like, dude, the stock market can't go any further down. So March 1st, I put my emergency fund in there, and it just went all the way down until March 20th, 2020. Every time I got a paycheck, I would put my money into the stock market. And every day I would look at my stocks. They just went down, you know? They just kept on going down. And I thought, you know what? I'm gonna put more money into it. And this is the reason why. Dave Ramsey, if you haven't heard of him, he's just this financial guy, radio show host, multimillionaire.
When you give your income to someone else, you don't have it anymore.
And he has this thing that he talks about investing in the stock market. He has this thing where if you invest in the U.S. economy, you're betting that the U.S. is going to continue to grow. If the U.S. economy crashes and all your money's gone, it's actually not the worst thing in the world, because the greatest economy in the world actually crashed. So that's actually worse than losing all your money. So it's a safe bet to bet on the U.S. economy, right? As long as you keep in there, 5 to 10 years, thinking about long term. And this is really what I want to get to in this video, is investing in the stock market has to be a long-term thing. You might have heard about GameStop this week. GameStop stock has skyrocketed and made tons of people so much money in the short term, and lost these hedge funds tons of money in the short term because they're short selling. It's wrong to think about the stock market in this short term idea of trying to day trade these stocks to just flip some money short term. It's very much a dangerous game to play. It's like you're going to the casino, If you want to truly win at the stock market, you've got to play the long-term game. And that's what I want to get to in this video. Is March 20th, everything I'd put in, which was around $15,000, had dropped half of its value, And then it went up a little bit, down a little bit, April 3rd. After April 3rd, it went up, and I hadn't made my money back yet, but it was going in the right direction. And then May 22nd, this is a day where basically, I've made back most of my money from these investments. It's awesome. I'm like, oh my gosh, I finally broke even. Should I just sell out? And I told myself, no. I'm just gonna keep on putting every paycheck into the stock market because I know the stock market is gonna go up. It's gonna bounce back. In fact, this was the moment where, yeah, it broke even, it bounced back, That was the moment. But I knew that this was my opportunity. The market was still undervalued, When you think about the stock market, the economy is always growing. So most companies are growing like this, but then some companies are undervalued. This is the price point, right? There's a fair valuation, and then there's an overvalued. All right. So I knew all these stocks were undervalued because they were at the same price they were early in the year, even though their companies have grown, And sure, a lot of them took hits from COVID, but a lot of them, think about all the companies that innovated in order to work around COVID and grew their base, and then they were basically destroying other companies that weren't innovating, so they were filling in the gaps that COVID had made inside the market. And it's just incredible because these companies that I held were good companies, ran by good CEOs, ran by good businessmen that knew how to work around and innovate to work within this crazy atmosphere that the COVID regulations were creating. Anyways, this was the moment I broke even. I decided to keep my stocks, not only keep and hold my stocks, but also buy into it more. I have finally made profit, This is 15% on my money. In the span of 4 months, I made 15% on my money. Which, if you think about it, in the stock market, in most years, the entire US economy grows about, let's say, 7% on average. Well, in 4 months, I'd made 15% on my money in the last 4 months. So I was like, all right, I'm doing really good, right? Awesome. Should I sell now and take my profits and run? Right? If I put $1,000 into the market, I had made $150. Why don't I take that $150? Well, I didn't take it. I just kept on buying into the market. Let's fast forward to July 10th. Boom, 35% gains, unrealized gains, meaning I haven't taken it out, it's still in there. So I've made all this money. The market's way greater than when I first started. I think most people at this point would have sold, but I didn't. I just kept putting every paycheck into the stock market because I knew these were good companies, and I knew that if I put every freaking paycheck into the stock market, it's just gonna reward me more because it's a snowball, right? Think about this. You get rewarded in the stock market for the more money you have in there. 10% on $100 is nothing compared to $1,000. So it's a snowball effect, right? That's what investing is. It's a snowball effect. It'll get bigger and bigger. That's why so many people complain about the rich getting more rich, is because they have the money to play with. And it's a snowball effect. You should get more rich the more money you have. That's just how life works. The strong get stronger because they keep up that healthy lifestyle. It's simple as that. Let's fast forward to August 28th here. I've made 69% gains on all my money. That's incredible. And this is end of August, beginning of September, right? Barely over half a year. And I've made nearly 70% gains on my money. 70%. My money has grown 70%. That's unrealized gains, of course. But why don't I realize those gains? Why don't I sell that? I have made 70% on my money. That's awesome, dude. That's what people hope for in a 10-year span. What do? Do I sell? I mean, the stocks have gone up so much. There's no way it's just going to keep on going up. Well, I just keep on putting money into this, right? Every paycheck, I'm putting money into the stock market. Let's fast forward to November 20th. All right? I am 117% up on everything I've put in. Yeah, maybe it's time to sell, right? I've over doubled my money at this point. I've over doubled my money that I've put in the stock market. Why don't I sell? I mean, this is freaking crazy. It's 117%. Why don't I sell? I just keep on putting money in. Why would I put money in something that has gone up that much? Well, because that's a good habit. It's a good habit, and I know that good habits over time will reward me. So I just keep on putting it in. All right, let's fast forward to January 22nd. We are a year into investing, and I have made 157% gains. So now's the time to sell, right? I mean, I'm up all this percent. Why don't I just take it and buy myself a new car? Well, that would be a trader's mindset. I have an investor's mindset, and what that means is that I'm investing for the future, and it does not make sense at all to sell. You've got to have the investor's mindset if you're going to invest in the stock market. These people on r/Wall Street Bets who are playing around with GameStop, trolling the hedge funds by raising up the GameStop stock price, they don't have an investor's mindset, you know, and maybe a lot of them made a ton of money in a short period of time, but it's like winning the lottery in the sense of, you know, it's rarity, you know. They're not going to be able to do that every day. This right here is consistent, you know. You've got to stay consistent with investing. Every paycheck, I put at least half of it into the stock market. You've got to make a stock market account and look for companies that you believe in, that you use. Think about, maybe you have an Apple phone. Invest in Apple. Do you have a Facebook or Instagram account? You know, I think Instagram's greater than Facebook at this point, but they're both owned by Facebook, so invest in Facebook. Maybe you're a vegan and you love this like Beyond Meat stuff that you buy at like Wendy's or, you know, Carl's Jr. or something. Beyond Meat is a publicly traded company. You can invest in Beyond Meat. Think about those things. Think about, the coronavirus is getting a vaccine soon. This is going to be a vaccine that's going to be distributed to millions and millions and millions of people all over America. What is a place where I can go to get that coronavirus vaccine that is going to make that place freaking rich? Walgreens. Walgreens is going to be distributing the freaking coronavirus vaccine, which is awesome. So invest in Walgreens. There's all these different types of companies. There's thousands and thousands and thousands upon thousands of stocks to invest in. And so many of them are publicly traded companies that you have run into in your life and that you know are good. One of the reasons I never thought about investing in GameStop stock and why I don't right now is because I hate their business model. You walk into GameStop with like your whole collection of games, which are worth like probably, you know, let's say $500. You'll just stack that on their counter and they'll be like, yeah, I can give you $15 for it. And you're just like, really? $15? for this many games, which like I paid $60 for each game. Yeah, we'll give you $15, you know. I hate that. I hate GameStop. I invest in companies that I know and that I know are profitable, and you can do research on the CEOs of those companies in order to see if, you know, you personally like them, because this should be, your portfolio should be a personal thing. And I think if you're just starting out in the market, make sure you don't buy more than 5 stocks. You know, I've been in the stock market for a year and I found 10 awesome stocks, and here are the ticker symbols right here if you really want to research them or something like that. These are stocks that are freaking amazing, that I love and have obviously done well in the past year, you know. The number one thing is you've got to start like ASAP, because time is constantly passing you by, and if you don't start right now, you're gonna regret it later, man. Investing is crazy, dude. And I actually want to pull up right here an investing calculator. So in the past year, I've made 157% on my money, which is awesome. But let's say you're starting out with $100 we're going to use 10 years here. All right. We get a return rate of 7% additional contribution. So at the end of every month, let's say you add $100. Now calculate. All right. In balance is $17,000. Your starting amount was $100. Throughout those 10 years, you've added $12,000. And so the total money that you've made in profit, basically, unrealized gains, as we'd say, is $5,201.89. Now here's the thing. I was working almost a minimum wage job throughout the summer, and I was able to save half of my paycheck every month, and that just adds a zero into this. And also, I did my research, and I was able to find companies that were awesome, that were really cool, that I knew would grow faster than most companies in the US economy. So instead of a 7% return, I think it's more realistic that every year they go up by at least 15%, because these are companies that are well managed, are innovators, and are just necessary. They fulfill a need in the market, and that is what makes a great business. Now, if you calculate that, at the end of 10 years, my imbalance is $260,000. Starting amount was $100. Total contributions throughout those 10 years, I contributed $120,000. The total profit I made is greater than my contributions. Total interest is $140,000. Pretty crazy, right? Now 10 years is a long time, right? You come by all these videos on YouTube that say, how to become a millionaire in 2021. Like how to do it now, There's this proverb in the Bible that says, wealth gained hastily will dwindle, but whoever gathers little by little will increase it. That was written a couple thousand years ago. In fact, 3,000 or 4,000 years ago. And it still remains true today. Isn't that crazy? It's going to be little by little. And you're allowed to make it go faster though, Obviously, say I get a better job and I'm able to make $3,000 a month, which is nothing. What's that? $36,000 a year. I put half of my paycheck every month for 10 years into the stock market with the 15% return rate, which was $140,000 in profit or unrealized gains last time. But now we've got $60,000 more. And if you're able to get a 20% rate, it goes from $210,000 in gains to $329,000. It's all about interest, compounding interest. That's the snowball effect of investing. By the way, if you do this 50 years, which is from age 20 to age 70, well, let's say age 20 to age 60, 40 years. If you do this consistently, look what you have, $96 million. All right, this is with a return rate of 20% per year with an additional contribution of $1,000 per month. I got 157% return in 1 year. That's way more than 20%. If you can nail down consistency, look how much you'll retire with. This is what Warren Buffett did. He invested consistently in good businesses over his lifetime. Now he's a freaking billionaire. Look, you can have $96 million if you just invest consistently in good businesses and add every month, add money into your stock market portfolio. Time is on your side. If you're younger than 20, you have this incredible privilege that nobody in their 30s, 40s, 50s, 60s have. If you're in your 30s, you have this incredible privilege that people in their 40s, 60s, and 70s don't have. And if you're 40, you have, no, I'm joking, I'll stop. What I'm saying is, if you're younger, you're more privileged than people who are older than you because time is on your side. So start investing now. Please use the link in the description, click that, Robinhood/Philip Tierra, because you can get your free stock to start off your portfolio, sell it, then create a real portfolio that you care about. It is so important to start right now. So watch this video right here. This guy taught me everything I know about the stock market. You've got to watch it and build your own portfolio, like right now. Like, do it, man. Just do it.